to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
More buyers than sellers. This is the equivalent of saying someone has more mothers than fathers. There's one buyer and one seller for every trade. Every single one. Stocks suffer their biggest drop since September. You know September was only 6 weeks ago, right? We're cautiously optimistic. You're also an oxymoron. Guy on TV, it's time to buy, sell stocks. Who is this advice for? A 20-year-old with 60 years of investing in front of him, or an 82-year-old widow who needs money for a nursing home? Doesn't that make a difference? We're neutral on this stock. Stop it. You don't deserve a paycheck for that.
Once known for its dunes and duty-free shops, Dubai is now outchecked Vegas in the global hotel race. The city boasts over 1.5 lakh hotel rooms, making it the world's runner-up after London, if you exclude China's tourism behemoths like Shanghai and Beijing. Think about it, a desert city that built its skyline faster than most cities could build an airport terminal, now hosts more rooms than Vegas, Bangkok, or Paris. From billion-dollar resorts to rooftop infinity pools, Dubai is not just selling luxury anymore, it's selling scale. In India, politics isn't just a profession, it's an heirloom. A new analysis shows that out of 5,294 legislators nationwide, over 1,100, roughly 1 in 5, are Dynasts. At the top of the charts, the Samajwadi Party and Janata Dal U, with Dynasts making up about a third of their benches. Even the Congress isn't far behind. Clocking in at 33%, it's practically a family reunion. The BJP, for all its talk of meritocracy, has nearly 19% Dynasts. And the Aam Aadmi Party, the self-proclaimed outsider, a still noticeable 8%. As we enter Vikram Samvat 2082, here's a wish. Not for gold or gadgets, but for animal spirits. India's investment ratio, that's total investment as a share of GDP, has slid from 35% in the 2000s to below 30% now. That's like running a marathon on half a lung. Government and households have been carrying the baton, together accounting for over two-thirds of total investment, but the private sector is still in the warm-up area. To get GDP growth back into the 7 to 9% zone, we need a physical investment cycle like the boom years of 2005 to 2013, and not just balance sheet repair or capex slides and PowerPoints. India's households now hold $3.8 trillion worth of gold. That's almost 89% of India's GDP. In other words, we are literally sitting on a mountain of metal wealth, big enough to fund 5 years of household savings. And thanks to a 60% jump in gold prices last year, that stash just added $1.4 trillion in value. About a third of India's GDP without anyone lifting a finger. India accounts for a quarter of global gold demand, proving that while the rest of the world saves in banks, we prefer our savings to glitter. For months, it looked like the public sector banks had stolen the spotlight. The Nifty PSU Bank Index soared nearly 18% this year, while private banks trudged along with just 9% gains. But now the tables are slowly turning. Private banks, led by HDFC Bank's strong quarter, are catching up fast, closing the gap with their state-run cousins. The PSU rally has been powered by loan growth, low valuations, and market euphoria around government-backed lenders. Private banks, meanwhile, were quietly fixing balance sheets and focusing on retail growth. For decades, Maruti Suzuki has been India's undisputed road ruler, but the crown is starting to wobble. The auto giant's market share has fallen below 40% for the first time ever, slipping to 38.8% in the first half of FY26. That's down from over 51% just 5 years ago. Out of 2 million passenger vehicles sold, Maruti moved 795,000 units, which is still impressive, but rivals like Tata, Hyundai, and Mahindra have revved up their engines and eaten into its lead. The story? The Indian buyers are shifting gears from budget hatchbacks to SUVs to EVs and tech-loaded rides, areas where Maruti is still playing catch-up. Back in 2010, VC sounded like a mythical creature, something that lived only in Silicon Valley. The most popular venture capitalists in India, dads, uncles, and generous aunts. That year, India pulled in just $800 million in VC money. By 2021, that number hit a wild $38.5 billion. What changed? India's population and aspiration, the famous VC pitch logic that even if 1% of India's 120 crore people buy X, and of course, you know the rest. The global chip war has a clear winner, and it's Nvidia, sitting on $100.9 billion of earnings. And that's more than TSMC, Samsung, and Intel combined. Yes, combined. The US dominates the silicon scene from Nvidia to Broadcom, Qualcomm, and Micron, but Asia has no sidekick. Taiwan's TSMC prints the world's most advanced chips. South Korea's SK Hynix and Samsung hold memory power, and the Netherlands' ASML quietly runs the world with its chip-making machines. Welcome to the world's most expensive leaderboard, the global stock exchanges. At the top, the New York Stock Exchange, the heavyweight champion of capitalism, with a jaw-dropping $30.5 trillion in traded value. Close on its heels, the Nasdaq at $29 trillion, proving tech stocks can move mountains, or at least markets. Then come the Asian giants, the Shenzhen at $20.4 trillion, Shanghai at $15 trillion, and India's NSE punching above its weight at $3.5 trillion, tied with South Korea's KRX. Japan, Hong Kong, and Taiwan follow, making Asia a serious contender in the trading big leagues.